Gold had been rallying for so long, for so many years, that people were starting to look for bargains, and they began to realize that silver, platinum, and palladium were trading at incredibly low ratios relative to gold.
The past 13 months have been an extraordinary period for the metals markets. Gold prices have rallied, but what's even more astonishing in this context is that gold has massively underperformed the other metals.
Well, it seems as though investors are attracted to precious metals for three main reasons. First, they're seeing enormous budget deficits in every major economy around the world. In the US, the budget deficit is 6% of GDP, which is very high for any stage of the economic cycle, but especially when unemployment is historically low at only 4.4%. But the US isn't alone. Many other countries are running enormous fiscal deficits. Secondly, you have the phenomenon of inflation being above target in nearly every major economy in the world, with the exception of China, as well as a few smaller countries like Singapore and Switzerland.
Not only is inflation above target, but in many cases beginning to trend higher again. Third, central banks are nearly universally cutting rates.
Here too, there's a few exceptions like in Brazil and Japan, but just about every other central bank you could possibly name has cut interest rates over the last year. And this has investors feeling very nervous. And so they're looking for alternatives to government-issued fiat currencies.
All of this created initially a tremendous appetite for gold. But then gold's trading ratios moved way beyond those of historical standards versus other precious metals.
People were starting to look for bargains, and they began to realize that silver, platinum, and palladium, by historical standards, were trading at incredibly low ratios relative to gold. So as investors began to diversify beyond gold, these other metals made enormous outsized moves.